I'm delighted that we're streaming live on Facebook. So good to welcome you all. And now we're going to have our scene-setting comments. We're very fortunate that our first speaker in the opening segment is Dr. Agnes Kalibata, the Special Envoy of the United Nations Secretary General. Dr. Kalibata, you have the floor for your opening remarks now.
Thank you, David, and thank you for those introductory remarks. Let me really take a moment to thank our partners, the World Bank, and Folu, and you and your team, David, for doing this work that you've been doing in terms of getting the dialogues off the ground. But also let me thank Martin from the World Bank and the leadership he has provided in advancing the work of the finance lever of change. When the Secretary General launched the Food Systems Summit, it was really clear that there were a few things that would have to be at the center of this conversation from an SDG perspective, recognizing that we would have to find ways of ending hunger. And we talked actually about zero hunger. Since then, we've been talking about zero hunger. He also recognized the need to end all forms of malnutrition. These things are all happening at a time when we know that doing this alone is not going to be enough, because it has an impact on our environment, it has an impact on our biodiversity. So the complexity of the food system has never been more complex. And our meetings today are happening in recognition of that fact, that coming through on food systems is going to have to be coming through on a number of issues together. These dialogues give us an opportunity to have the conversation at country level and to ensure that at country level, different sectors that impact the food system are coming together in ways that allows them to recognize how their individual roles in impacting the food system, but also their collective roles and how they can work together. But these dialogues also give us a chance as people, as communities, to understand our responsibility in recovering and turning around, if I might say, our food system. I was only yesterday just reading through this book, where recognizing that every time we plug into the wall to get some form of electricity, we are actually impacting how much we might be able to come through on net zero. So we have a whole lot of things to do. The food system put a lot of emphasis on taking this information and this knowledge out there. That's why you call it a People's Summit, so that at the center of this conversation, we recognize that you and I have a responsibility to turn these things around. So in this conversation here today, we get the opportunity to take this further. We do have action tracks that were put in place to help us think through the type of action that is needed in terms of investments that can be done. And we do have the scientific group that is working on helping us make choices around the different things that we might invest in and how those things might impact the outcomes we want. In the end, the food system is extremely complex. We are hoping that by doing all this stuff, we can help countries come up with national pathways or strategies that recognize that nations must have frameworks that appreciate and understand that going forward, we must work from a food system perspective. It's not just going to be agriculture or nutrition here or this and that there. No, food systems conversation has to be a national level conversation from now on. And we need frameworks that can help us ensure that this is secured in our country's policy environment, but also that this can provide the right framework for investments to happen. So taking me now to this conversation here, we need investments to happen in food systems, but they will not happen unless we have the right level of architecture to encourage those investments to happen. And I hope that as you go into these conversations here today, you think about what that means for the complexity of the food system, for the architecture that we need, for the role of public financing and for the role of private sector financing and how these things come together. Help us understand how these things are going to work to pivot our food system to be a more functional, a more equitable, and a net zero food system. So I look forward to these conversations. I encourage you to be bold as you take on these conversations. And I really hope that we do not let me use the right word, that we find ways of further encouraging this type of conversation, because so many people have been having conversation on food systems, but we need to make sure that there's light at the end of the tunnel that tells us that we can actually do something about it if we come together in certain ways. So I look forward to this conversation again, and thank you, David.
Thank you very much indeed, Dr. Galibata. Brilliant. Start off. Let's now shift immediately to our other co-host, Jurgen Vogeli. Jurgen's Vice President for Sustainable Development in the World Bank Group. Jurgen, you have the floor. Thank you.
Well, thank you so much, David, and really delighted to get together with all of you, friends and colleagues. And I'm particularly delighted to co-host this event with my friend Agnes, who is doing a tremendous job in putting the food financing agenda at the forefront of the development discussions going into the September global conference. As you said, David, we now really, I think, fully realize that the current food system as we have it is subtracting rather than adding value globally. And I believe this is something we absolutely must change in this decade. I do believe we have an opportunity to do so, but Agnes said this is complicated, it's messy, it's not a simple, straightforward thing, but it is absolutely essential for us to change the trajectory. The current food system is coming at the cost of our health. Nearly half the world's population suffers from some form of malnutrition, and it's coming at the cost for our environment as planetary boundaries are increasingly violated and pushed over the edge. And again, this is the decade where we have the opportunity, but also the obligation to really do something about it. And of all the things that are currently discussed in the context of a COVID recovery and in the context of getting on top of climate change, this is, I still believe, maybe the least known and the least understood, both in terms of its detrimental effect that it has as it is, but also in terms of the opportunity going forward. So very clearly, there are solutions to tackling the most critical and urgent challenges of our time: the healthy people, healthy planets, and healthy economies. Those three things are what everybody's thinking about right now, and food systems are right in the middle of it. So what can we do? Growing hunger, and this is a part of the problem, of course, is a manifestation of conflict, climate, and economic shocks. And the health crisis and the climate crisis are also a manifestation of what people have decided to do and not to do. It is mostly, in my view, the result of wrong-headed policies. And I hope in this dialogue we can spend a little bit of time discussing those. The same food system that leaves close to 700 million people chronically hungry, it generates mountains of food loss and waste, and it generates huge amounts of greenhouse gas emissions globally, up to 25%. So we really need to look into what it is, and both of you have already a little bit alluded to this. What are the incentives to get this right? So we are working in the World Bank side, we're working with countries and partners to help transform food systems for lasting food security. And of course, policies, and I'll get to that again in a second, are at the heart of this. But we're also helping countries, and as Agnes said, this has to be at the country level, and it can't just be one piece of the food system, it has to be all of it. We help scaling up climate smart agriculture, early warning systems, and we work with countries to really understand, if you support your farmers and your system, the broader food system, what works and what doesn't work, and what creates positive nutritional, climate, environmental outcomes as opposed to the opposite, which is what we're seeing right now on a regular basis. What creates jobs and economic opportunities along the value chain, especially for women and young people going forward? How do you help? How does the food system help reduce conflict if it's done in an inclusive way and in a natural resource management positive way? And how can we shift our focus to the prevention of the next crisis, not just preparedness and response, but the prevention, such as a new zoonotic disease, by promoting One Health, so that food system and economies overall are more resilient to shocks. So we at the bank see climate proofing food production as absolutely key to increasing the long-term resilience of people and economies. We are ramping up our work on climate overall and focus in particular on adaptation, about 50% mitigation and adaptation. Just to share with everybody, we are going to launch our new 5-year climate action plan very shortly within the next few weeks. And we will focus on 5 key systems that contribute 90% of global greenhouse gas emissions. Of course, it's energy, of course, it's transport, cities, and manufacturing. But what people still mostly don't understand is that the food system and land use patterns that we apply at the moment are a huge part of that problem and a huge part of the potential solution.
Wow.
So financing is a critical element to achieving these goals. And I'm really happy that we have this conversation around financing because, and there are several elements to this, of course, right? So there is what does the public sector do and what do private companies do? And certainly what do consumers do? On the public side, I think there is a real opportunity here because unlike in some other sectors, actually there is a huge amount of public financing already going into the food system, mostly in supporting farmers. But unfortunately, as I've said, and as many of you do by now, certainly fully realize and support, the $700 billion that are being given to farmers around the world to support them are not used in a way that is actually adding value overall. It is subtracting value. And I think if we need to spend some time to face that reality, and again, it is not about saying reduce or eliminate agricultural subsidies. Yeah. And if we go to, as Agnes said, if we go to the country level, no one's going to listen. Yeah. This is not the narrative to go into. The narrative to go into a conversation is to say, if you support your farmers with billions of dollars in your country, do it in a way that does, of course, increase income and productivity and production for the farmer, but at the same time creates the positive environmental, social, and health outcomes that we so urgently need. And we do know that this is absolutely possible. So do not take it as an answer in the conversation, this can't be done, it's too complicated, it's political economy. We do now have a number of good examples where it was possible in a political economy context to actually take a step back and say, yes, we will continue to support you farmers, but we will do it in a different way that actually has these positive outcomes. Then, of course, we have 700 billion. I mean, we have $2 trillion in annual private sector investments, and I'm sure we will hear from Sunny and many others in the conversation later. What can be done to really innovate, that this is innovation for a purpose, that it's not just innovation for innovation's sake, and it's not just investments to produce more calories, but that the innovation and the investment basically add up to something that has better inclusion, better health, and better environmental outcomes. And then the work with consumers, I just saw Gunhild Stordalen coming on as well. I hope we will hear from you as well, Gunhild, later. What can we do so that the consumers that spend about $87 trillion, that's 12 to 15% of global GDP on food, what can we do that pull factor is done in a more sustainable way and in a way that really gets us these better outcomes? So as Agnes said, we're here to listen today, really delighted to be with all of you. We need bold ideas and suggestions. We can't have a conversation that comes out with this can't be done or this can't be changed. I believe we must do this in this decade, because if we don't, we will fail on the health front, we will fail on the climate front, we will fail on the green and sustainable recovery front. So with that, let me now hand it over, I believe, to Jeremy Oppenheim to kick off the panel discussion, or back to you, David.
Hang on, back to me. Thank you very much.
Back to you, David. Great. Yes, thank you.
Yeah. Thank you. Very good. So look, that set the scene. Jurgen quite clearly saying to all of us that this is essential, it's doable, it's urgent, and he's also pointing to areas where money is available potentially for redistribution. And as Agnes Kalabata said, but it all has to come from the countries. And now we have 7 what we call fire starter speakers before we go into the dialogue. I'm going to ask each of the speakers to please time themselves and limit themselves to 5 minutes. And I'm going to take the liberty of telling you when you are at 5 minutes and inviting you to come to an immediate end. That's because we are going to have difficulty with time management. And with absolute delight, I would like to invite Sunny Verghese, who's the CEO and co-founder of OLAM International, as well as being chair of the World Business Council for Sustainable Development, to start his 5 minutes remarks now. Sunny, you have the floor.
Thank you, David, and it's a real privilege to be invited to share my perspective on finance to transform the food and agricultural sector to becoming more sustainable. OLAM has, over the last 3 years, raised about $3 billion of sustainability-linked loan and financing. What started off as a ripple has emerged into a wave. And I think globally, we are now poised to see a positive tsunami of green financing to support the transition of the food and agricultural sector. So why was this a priority for Olam? Firstly, it was very consistent with our purpose of reimagining global food and agricultural systems. And what we mean by that is how do we help and enable growing more food, feed, and fiber that is required for a growing population estimated to be 9.5 billion people by 2050 without destroying the planet, within the planetary limits. And I think as we saw David set the scene and then Agnes as well as Jurgen, we are all very clear now why we need food and agricultural systems to transform. We are also pretty clear now, and there's a growing consensus on what is our vision for a transformed food and agricultural system. What is still lacking is the how. And I think the Food System Summit will help us look at some game-changing innovations that will allow us to fill this gap, the big action gap between the vision, the why, and the how to get this done. Yeah. So the second thing we did this for and focused on sustainability and green financing is that we wanted to reduce our cost of capital. Being a leader in food and ag sustainability, we have been able to reduce our cost of equity and therefore improve our value to our perceived value to our investors. But more importantly, in the $3 billion of sustainability-linked loans that we have raised, we have, if we hit certain sustainability metrics, milestones, and targets, we will be able to reduce the cost of borrowing between 10 and 15 basis points, which is a significant reduction in our cost of borrowing. Thirdly, it has helped inspire our talent pool and our employee population because they see a purpose beyond just selling more cocoa and coffee, and that has helped us dramatically increase productivity. These are some of the reasons. And most importantly, absolutely, it is the right thing to do, and that is reflected in our purpose as well. So what can we do in terms of practical measures to change the livelihood of farmers and transform the food and agricultural system? So the 75% of the world's food is produced by smallholder farmers. And yet, if you look at Cote d'Ivoire in a cocoa farming household, typically the household income is just above $1 a day, which is below the extreme poverty line of $1.90 per day. The living income in Cote d'Ivoire for cocoa households, according to the Fair Trade International, is about $3.24 or 25 cents. So we are well below the living income. So we need to first seize a moment of immense opportunity to find a way of helping farmers by developing a machine learning, AI-enabled agronomy, crop care, nudge brain that will allow to provide contextualized, personalized information to smallholder farmers to improve their productivity and their incomes. So that is one way of doing it. Second is we need a global crop insurance system. About 80–90% of the smallholder farmers are uninsured compared to the US where 80% of the farmers are insured. But the crop insurance, 60% of the crop insurance is paid for by the US federal government. And we need a plan for crop insurance for smallholder farmers as the second how. And finally, we need a way of measuring sustainability metrics for smallholder farming systems so that we can pivot them to produce in a more sustainable way. I'll pause with this, David, and we'll be happy to answer any questions later.
Thank you very much indeed, Sunny. I was just thinking while you were talking how important it is that a company like yours is actually linking and aligning purpose with financing. And are you able to stay through the whole thing? Because it'd be nice to come back to you, especially since you were well inside your 5 minutes. Is that okay? Can I come back to you after a bit?
I would be happy to add on. Thanks.
Yeah. Thank you so much. It's really, really lovely that you have been clear on this. Let me go to our next fire starter speaker. This is Ismail Sunga, who is CEO of the Southern African Confederation of Agricultural Unions. Ismail, if you'd like to give us some opening remarks to prepare everybody for the dialogue, your 5 minutes time is starting now.
Thanks, David, and thanks everyone who has spoken before me. I've been asked specifically to speak about whether sustainability is now good for farmers. I'll try to make some remarks around that, but also linking it to finance. But I could not resist, and I can't resist the temptation of just adding on to what Jurgen said earlier on about the true cost of things. And just add this twist that we know that most of the things that happens in all value chains are financed. So, and they are financed in all different directions. And finance is at the core of what happens when you're doing things on a commercial scale, which basically means that finance has been part of the problem that has been created, because it has been financing also the wrong things that we are now accounting for. I thought that was irresistible to just highlight, but I'll go back to my points now. Is it good business for sustainability, good business for farmers? I say at the moment, no, it's not, unless if certain fundamentals are sorted out. And let me just highlight what those fundamentals are. The first thing really is about the cost of finance, which is a no-brainer. It's very high cost and unaffordable to most of the farmers. It comes in packages that are not the right packages. We are talking here of both commercial and development finance, including subsidies to put in the mix. The next point really is about the consumers would find cheaper food, which is not healthy food, much more affordable. And it also means that healthy food, unfortunately, is more expensive. So producing something that consumers are not going to buy is not going to be sustainable for farmers. It's a simple fact. Next point really is about, unless if farmers get a fair share of the value, whatever they are producing, if there is no fairness in the valuation of their input, we are not going anywhere. Sustainable production or not, it does not matter. So that is a fundamental that needs to be addressed. Another point really is about, it's a systems issue. It's not a farmer's issue. So let's not put the obligation for nature positive production to farmers only. It's all of us. Everyone has to be nature positive. We have nature positive consumers. We have nature positive processing. Everything has to, not one side. Another point at the moment also is about ecosystem management rewards that currently farmers are playing, but not being accounted for properly, and neither are they being also paid for accordingly. Then the issue also is to do with lack of differentiation between policies and financing instruments with respect to whether it is nature positive or not. It just finances without necessarily saying this is good for the environment or this is bad for the environment. I'm talking about policies as well as financing mechanism. So that is an area also that needs to be. Much more fundamentally, David, is the issue of how on earth do you expect farmers to be nature positive when they're out there in far-flung areas where there are no bridges, no roads, no clinics, you name it. How can they become accountable for nature positive production? Is unrealistic. That ABC needs to be sorted out. And then, of course, the final point for me at the moment is that the transitioning costs are going to be massive. And by its very nature, farming is a long-term occupation. It requires fundamental infrastructure, sunken costs, and it needs capital that is appropriately provided under those circumstances. So that we need to go for that. Otherwise, I think I'll stop here. Then I'll address the other elements that are to do with what needs to be sorted out, because I would sound like a broken record if I continue with my hobby horses of fairness and equity and the rest of the stuff. I'll stop here. Thanks. Over to you.
But you're here very much to be on your hobby horse, and thank you for reminding us clearly that farmers are able to do amazing things, including managing ecosystems, but they have to be paid for it. It's no point in expecting them, especially when they are earning such a low income, to take on additional tasks. And if you don't mind me repeating that point that I felt you made, it just seems to me to be absolutely hugely important. Are you able to stay throughout the whole session, or do you need to go off? I just need to know for my own planning.
I'll say out throughout the whole session.
Okay, no pressure. If you need to go off, just send me a message in the chat, because I don't want to lose you. Thank you very much indeed, Ishmael. Lovely to be with you.
Thank you.
I'd like now to go to Sabrina Mustopo. It's a small change of order, and I'm saying to Naoko, don't worry too much. I'm just inviting Sabrina to come in now, and then we'll come to you immediately afterwards. Sabrina is the founder and chief executive officer of Krakatoa Chocolate, which is a farmer-to-bar social enterprise working directly with smallholder cocoa farmers to produce chocolate. And she's got lots of other experience and stuff which we will hear from. But I'm particularly inviting Sabrina in her 5 minutes to just give us a little bit of provocation based on her experience in Krakatoa. Over to you, Sabrina.
Thank you, David. And it's a real honor for me to share the stage with such a distinguished group. And I hope that I can provide some candid thoughts and perspectives from the point of view of an entrepreneur, and also share some of the changes that I believe are needed in our food systems. Krakatoa is a vertically integrated chocolate company that works directly with smallholder farmers in Indonesia, and we manufacture and sell chocolate. We create impact by firstly providing training to farmers to improve the productivity and sustainability of their farms, and secondly by paying farmers 2 to 3 times the market price for cocoa in return for their commitment not to encroach into protected forest areas. I started Krakatoa about 8 years ago, and it said that anywhere between 50 to 80% of businesses fail within the first 10 years. And I've not seen any studies that have looked into the failure rates of impact of pro-nature business, but I believe that the failure rates are much higher. We've all heard the saying that it's good business to do good. And we've also heard that companies with better ESG scores outperform the competition. And I do agree that good businesses have advantages that pay off in the long run. However, I also think that this optimistic narrative belies a lot of the challenges and the trade-offs that early stage companies have to make. In our experience, providing training, tools, and support services to farmers incur costs. Paying farmers significantly higher prices increases our cost of goods. Building systems to ensure transparency and no deforestation comes with a price. And working in challenging and remote areas close to national parks where regenerative systems are most needed increases the risk and increases our cost of monitoring. Which leads me to provide a very unpopular perspective. Pro-nature impact businesses are bad business, if you look at it purely from a financial returns perspective. And that is why I was very excited to first learn about blended finance, and was very hopeful that this new structure of financing would be able to help subsidize the added costs that impact businesses need to bear, and also reduce the risk inherent to all business models. However, it's been my experience that blended finance options favor larger projects and more established companies, and remain out of reach to companies of our size. Data by Convergence Blended Finance cites that only 6% of blended finance transactions were below $5 million, and only an additional 8 million were below $10 million. We know that the magnitude and the urgency of the climate problem requires revolutionary change in our food production systems. And for the same reason that we could not expect Ford or General Motors to spearhead the development of the self-driving car, I believe that some of the game-changing ideas we need to tackle the climate problem and regenerative agriculture will come from startups that were established to disrupt the status quo. But many of these companies will not survive without better financing options. Commercial investors know that the riskiest options are early stage companies that have high risk of failure and do not have proper governance structures and systems in place. Yet a third of the $300 billion invested by VCs in 2020 went to seed, angel, and early stage companies. And I believe that we need to see similar ratios in the blended finance world and make blended finance options more accessible and available to early stage regenerative businesses. Thank you.
I want to really acknowledge the fact that you chose to in a way, spell out the unpopular truth. I mean, it clearly is important that we understand your experience, and in particular understand that there seems to be a sort of gap, really. And as you say, the money does not go to companies of the kind that you are describing. And I hope that you'll be able to stay with us and help us to come through this and to find a better way of really helping nascent nature positive companies to get a foothold. I mean, just 30 seconds. As you look ahead to the future, what do you think? Is Krakatoa looking okay, or are you still feeling quite anxious about whether or not you'll be able to make it?
I think it depends on the month, but it's a good mix of optimism and anxiety.
Yeah. Well, thank you. And if you wouldn't mind sticking, if you are able to be here, it'll be interesting to perhaps either during the discourse or right at the end to see whether anything you're hearing is encouraging your optimism and dispelling your anxiety. Super important that you are telling us this. Thank you. Thank you, Sabrina. I'd like now, actually, I do want to try to stick to my order, which I got myself into a tangle on. And Naoka, the reason why I got confused is that your video is alight, but I can't bring you in now. I can't bring you in until the right place, which is after our next speaker. So I'm just going to ask you to hold for a bit longer, and I invite Tanya to come in. Now, Tanya Haverman is co-founder of Clar Mondial and director of the Food Securities Fund. Clar Mondial is an employee-owned investment advisory firm that's focusing on mobilizing capital for sustainable natural resource management. And I wanted actually to ask Tanya to really go into some of the challenges of the food security funds. Does de-risking through supply chain partnerships and blended finance possibly have potential to go a lot further than where you've gone so far? Tanya, you have the floor.
Hi, thanks so much. And yeah, I can also really commiserate with Sabrina because it's taken 5 years to develop this fund with a lot of blood, sweat, tears, and own money. I think, first of all, I'm very pleased to be here. Thank you very much for the opportunity, and very happy to be on the panel with such distinguished guests. And Sabrina, it would be great to catch up sometime. So yeah, Clar Mondial structured and developed the Food Securities Fund starting around 5 years ago in response to the need that we saw, the unmet need for additional working capital to support local businesses that operate in supply chains in emerging markets and are the critical link between smallholder farmers and supply chains. And I think, to one of the overarching trends of this panel is that I think, finance also needs to be considered in terms of a systems approach and how they can leverage the system, the food system and the value chains, rather than looking at sort of individual points within the value chain. And that's what the Food Securities Fund does. So we structured it in response to interest that we were seeing from institutional and larger investors in deploying more to sustainable agriculture, and what they were saying was around a lack of investable opportunities that really fit, their investment criteria in terms of type of structure and liquidity and so forth. And also, on the other hand, trends like what's been happening with Olam and many other businesses, which is an increased focus amongst corporates on trying to better integrate smallholder farmers into their sustainable supply chains, having more transparency and disclosure. And through that, we saw that, obviously there's a huge financing gap across the whole value chain, but surprisingly, there was a very large one also for working capital, especially working capital that could support those local businesses and actually working with the farmers prior to there being product that could be collateralized, and being able to support the farmers throughout the whole agricultural season on a year-on-year basis. So the Food Securities Fund focuses on providing working capital to local companies within established supply chain relationships. And for those of you that don't appreciate it, working capital is really the lifeblood of a business. It's basically what keeps the lights on. Maybe you have longer term investments for capital infrastructure or for making more strategic initiatives, but working capital is really what helps you on a day-to-day business makes the business go round. And companies use that in the smallholder farmer context in order to be able to provide training, to pay for certification costs before there is product, and also do things like advanced drought-resistant seeds. And access to working capital is really what helps to determine how much business that local companies can actually do with smallholder farmers, including local cooperatives. So for example, do they have enough cash at the right time to buy the product from the farmers, so the farmers actually are able to capitalize on the certification or the good quality improvements that they've been doing over the year. You'd think that banks would be in the space, and obviously they are, but actually historically banks have not been doing that much agricultural lending. There are not any very good statistics, but people think that actually the predominant amount of working capital lending comes from the value chain itself, so in the form of pre-financing or advances. Banks are, traditionally quite limited because they focus on collateral and, have certain things that they're allowed to do or not allowed to do, which have become more restrictive since the 2008 financial crisis. So in response to that, there has been this rise of non-bank financing, which is actually called rather ominously shadow banking, which we've seen quite a few new funds come into the space trying to address this credit gap. But in my view, we need quite a lot of new funds, and also growing those existing funds so that they can actually step up to and meet the financing gap in agriculture. So what does the Food Securities Fund do in particular? The Food Securities Fund is able to provide unsecured working capital financing because we work through a value chain approach. So both in our de-risking, on our origination, and also on our de-risking. So we ask for things like partial first loss guarantees, and being able to leverage the longer term offtake commitments that larger corporates have. And then we also have a guarantee subsidized by the USAID Bureau for Resilience and Food Security, which should help us prove the case of the fund in the first couple of years while we get to sort of scale and track record required by institutional investors. And through our loans are relatively short term, but the good thing is that our structure is such that we can actually renew and grow the loans over time. So the idea is that we can be able to accompany the business on a year-by-year basis, and also see them make incremental improvements to access our financing. I think the unique thing about the Food Securities Fund is really that it takes this value chain approach, and that it also has two forms of blending, i.e. blending from larger corporates, that's from the private sector, and also from USAID and development finance institutions. And through this, we can sort of provide acceptable risk-adjusted returns to larger investors, where we see that there is a huge opportunity because investment returns are at a record low basically here in Europe at the moment. So we think there are a number of factors that really make this a very opportune time. So I think in summary, we're really excited to be finally operating the Food Securities Fund. We started lending in March. We have a really exciting pipeline. We see that the sector is really underserved, and that we really have an opportunity to help address this, and also help to push more transparency and responsibility within value chains over the next many years, I hope. Thanks. Thanks
a lot. Brilliant, great, lovely example. And now let's go immediately to Naoko Ishii. Naoko, in your time in the Global Environment Facility, you were a big supporter of that Food Securities Fund. And we'd really like to turn to you. We know that thriving natural ecosystems provide critical services that maintain agriculture systems, but the value of biodiversity just doesn't seem to be fully appreciated. What's the implications of this, and how can we get things better? 5 minutes starting now. Thank you.
Thank you. I'm very happy to be here. As already a previous speaker mentioned, actually the food system is broken because it has caused so much of the environmental costs, the social costs, and the human cost. And as Ishmael pointed out so clearly, the finance is a part of the problem, or maybe the fundamental or the major part of the problem, by not recognizing the value of the nature, including biodiversity, as David, you just mentioned, and by failing in incorporating those values, the finance system continue to degrade the nature, and the ecosystem services, and actually that then it says it itself is exposed to the financial risk going forward. Then what to do with the financial sector going forward? And I want to rate three things, three options, or the task to do. The first one is really try to fix the financial system, the straight, and by incorporating that the cost, the value of the nature, the value of the biodiversity, and incorporate it into the economic decision making, including investments. And as we all know, TCFD has been doing a quite good job by incorporating the price of carbon in economic decision making. And we were so happy to see that TNFD, this time nature related to financial disclosure, the task force is launched I think it's last week. So that while we recognize that the valuing the nature is much more complex than just valuing the carbon, but it is really a great start to as fixing that this fundamental problem of the financial system. The second thing we want to do is to make sure this movement to demand the fixing the financial system be assured by incorporating actually the investors and the consumers to demand the due diligence, to demand that information that the value chain be kind of traced, and make sure that there is no illegal deforestation and other environmental risk. So the verifying those and the supply chain, the sustainability is a very important work. And I'm also very encouraged to see these days there are a lot of initiatives kind of popping up that across the world, and let's make sure that those initiatives be kind of coming together to become a kind of scalable investment. And the ongoing digital and innovation or the satellite technique, those should actually work, should help ensure the compliance of the agricultural and food system activities. The third and last thing I want to say is, while fixing the financial sector and encouraging actually the demanding that the system to be worked out, we also want to see the leveraging the investment to create the nature positive, regenerative agriculture, how to steer the money into those opportunities. And here already Sabrina and Tanya already mentioned that an instrument like a blended finance is going to be extremely important. And again, we wanna when I was at the GEF, we have worked with actually Tanya and the others to create those opportunities, but we need to do it much more systematically at a much more the scale and the speed which is required to ensure that the biodiversity and the nature integrity be kept. So those are three things I would like to see going forward. It's very, very important, I think, to fix that in the food system and to ensure that the agriculture, food system is not subtracting but adding value to the economy. Thank you, David. Back to
Naoko,
you.
thank you. Actually, having worked with you on these issues now for several years, I'm very happy to tell everybody that judged by me, all your recent professional work has really reflected this wish for agriculture to emerge as a net positive rather than a net negative when it comes to sustainability. And thank you so much for sticking within time. It makes my job an awful lot easier. Wonderful. Look, I know it's super late in Tokyo. I don't know exactly what time it is, but I expect it's not exactly the kind of time that we'd like to be up. So just on behalf of all of us, thank you for joining. If you can stay, we should be pleased, but at the same time, a person has to sleep for a bit. So
I will be here.
Oh, you are wonderful. Thank you. You get extra special mention for that. Wonderful. I'd like now to move to Rachel Kite. She's Dean, 14th Dean of the Fletcher School at Tufts University. Rachel is, and she's also, she's been there since 2012. She's really very exciting in this role. And I know Rachel quite well because of work she did in the World Bank Group as Vice President Special Envoy for Climate Change, and then as Chief Executive of a Sustainable Energy for All. So Rachel, in your one of your roles is on the global panel on agriculture and food systems for nutrition. I'd be very interested to get your thoughts on how the nutrition agenda can be more reliably financed as agriculture systems come under increasing stress. Does the private sector have a role to play? And thank you again for joining us.
Well, thank you very much, David, and it's a real pleasure to be here. And thank you to the World Bank, to Agnes Calabato, and everybody for pulling this together. So in the short period of time, I thought the most useful role I could play, wearing my hats both as part of an interdisciplinary research group at Tufts, a member of GLOPAN on the Food Systems Commission, but also in my work on climate finance and the financial transition around decarbonisation, was to sort of take us up a level and look at how all these pieces fit together so that we don't make no regrets decisions as we send signals in the run up to the summit and afterwards. So I think one thing there are a couple of juxtapositions which are really important. First is that to get to our goal of a healthy, affordable, sustainable food system, then we will need to use policy and understand how to manipulate market signals in order to have a financial system that makes that possible. But at the same time, we, and I think this has been exemplified in some of the work that's being led by Simon Zadek and others, we need to build a financial system that can actually drive progress. So it's not just sort of small changes within the financial system or new innovations within the financial system. It's actually the shift in the financial system which will allow us to get to the point where we can have a healthy, affordable, sustainable food system for all. The other juxtaposition is that we have to work bottom up and top down at the same time and hope that we meet in the middle. So what do I mean by that? Well, bottom up means that we have to think through carefully the viability of those who farm. What they're producing, how they are incentivized, what they are paid for, how they are paid. And we have to deal with the equity and justice issues in there. And we have to face some complicated issues there. But we can take hope, I think, from the fact that the climate, food and biodiversity conversation is actually beginning to come together in an integrated way in a number of geographies for the first time, I would say. Secondly, we have to really focus on growing the food that we need. This means that our food systems from the bottom up have to be about enabling those who grow our food to grow the food that people will need and want to eat. And I think that focusing more of our work on the dynamics of those food crops will be really important. Thirdly, we have to carefully look at the issues of food prices all the way along the value chain and make sure that those prices reflect the importance of the food, both for the planet and for people. And I think that increasingly understanding how we can unpick food pricing in this global system will be really important. From the top down, we've got lots of really good research now, numbers coming through on the size of the markets, the centrality of them, the size of the misapplied subsidies that are going into the system, and the points that Jurgen makes in these conversations about the fact that we have to just sort of shift the balance of money from one thing to another is important. We're not looking to mobilize trillions of dollars that isn't already in the system. And then we have to look from the top down at the dynamics around pricing and what it's going to take to shift to financing or making financing flow into healthy, sustainable food products and the systems needed to produce them. And I would look at the financial system transformation that we're beginning to see in terms of decarbonisation elsewhere. And it isn't until the financial system understands risk that it really moves. You can dangle opportunity in front of them, and we will dangle opportunity in front of them. And many of those entrepreneurs and those who know the opportunities are on this call. But we really have to frame risk very succinctly in order to really make large-scale investment shift from things that poison the planet and poison us into the things which are good for us. The private sector, therefore, is a very, very big part of this, both in terms of the producers of food, but also those who finance. And there we need to really understand the policy drivers that will force the private sector to understand the pricing correctly. We will have to look at all of the standards and the ESG criteria and everything that need to bring the sustainability part of the conversation and the human health part of the conversation together. I hear that. So I think that we will need to therefore work both vertically and horizontally. I may have to drop off my call, David, early than I planned to because of a family commitment. But I want to say one thing in conclusion, which is that we are framing a lot of the elements of this food summit now around a narrative of zero hunger. Zero hunger, as far as I understand it, is in large part a political construct. And I think that in order to move markets and in order to move finance, you have to explain the risk, but then, as I said, explain the opportunity as well. And I'm wondering if there's a positive a spin needs to be put on what the world that we're trying to arrive at looks like in order for new financial actors to come into and explore the opportunities. And so therefore, you know, if we need an affordable, healthy, sustainable food system, then we really need to work on the integrity of what we consider to be healthy and sustainable, and make sure that the financial sector understands that, understands the risk of not doing that, the opportunity of doing it. It means that the public policy side needs to put new descriptions around what poverty lines look like. We cannot operate in a public financial system when we have poverty lines which will not allow you to put a healthy, sustainable plate of food on your table. It means that we have to talk about income support, especially to those who grow the food. We have to reduce loss and waste. And so it really is about finding ways to build the financial signals, which mean that the internalizing the externalities go alongside with the affordability and desirability of diet. Otherwise, we run the risk of building lots of vertical financial solutions in a horizontal financial system, which will simply drag us back. Thank you.
Thank you for that very important caveat at the end. I'm sorry that you've got stuff to deal with family-wise. I hope it's not bad, and really grateful to you for joining. Actually, I haven't moderated a panel where you've been a speaker for a bit, and it's just sheer delight once again to hear your brain working. Thank you. Well, so Rachel was challenging us, everybody, to actually design it right. She said, look, if you don't design it right, there's no point. And she gave us some very useful pointers on the design. Another person who's been looking at the proper design of finance systems for food systems transformation is our next speaker, Jeremy Oppenheim, the founding partner of Systemic. Jeremy, I want to do a bit of a deal with you. If you could be relatively short now, I would give you the credit for the end and give you a chance to be the final summarizer at the end of the discussion period. Over to you, Jeremy.
David, thank you. I hope everyone can hear me. It's a pleasure to be on this panel. I mean, so many good things have been said by all the other members of the panel. I'm not going to repeat the territory which has been offered. I am going to offer a very quick summary, which is just to recognize that I think Agnes started by talking about systems, and then Jurgen translated systems into both policy and different finance levers. And then, you know, Sunny and others came through with, in one form or another, ways of describing the need for, you know, a whole of system change. And I think that notion, David, sits at the heart of what we're wrestling with here. And I want to characterize it just for a moment by reflecting on what has happened in the energy system, because I think it's not the same as the food system, but there are some features of what's happened there that I think we need to see how we learn from them and figure out how they play out in the food system. And so I just want to, and in that respect, I'm going to pick up very deliberately on what Rachel talked about. In the energy system, it's really fascinating to see how some of the companies that we thought of as being the energy majors, and obviously the oil and gas companies are amongst those, but it was also a number of utilities, have literally lost trillions of dollars in market capitalization over the last 5 to 10 years. And it's not that I want to celebrate the loss of that value, of the valuation. I mean, that's so disconnected from a small farmer that it's unimaginable how one bridges the two. But what it reflects is that the capital markets, in many different ways, have done exactly what Rachel described, which is that they are seeing the end of a particular form of the energy system, which was based on carbon-intensive forms of energy, both coal and obviously hydrocarbons, oil and gas. They are anticipating the end of that, and they are trying to figure out, and it's deeply imperfect, but they are trying to figure out how to reallocate many different forms of capital. And it's not just the capital markets doing it, it's governments at long last trying to get their heads around some of the subsidies and the tax regimes. It's consumers making different choices in terms of, which utility, who do I get my electricity from? And am I willing to pay a little bit more for it in exchange for it being part of a movement, not just being part of a transaction, but being part of a movement. And so the shift that's happening right now in the energy system is staggering. It's incomplete, but it's staggering in terms of the way in which it's shifting risk and return and incentives and conduct and investment on an end-to-end basis in a system that needs to be utterly transformed within our lifetimes. And it is exactly the same that needs to happen in the food and agriculture system. It's not a different phenomenon. I mean, we have a food and agriculture system whose structural features, which are around producing large amounts of, if you will, food at the lowest possible market cost, and where we've ended up with a huge degree of specialization and scale, and with that immense both risk in terms of the concentration of the system, but also risk in terms of the way in which we've externalized every possible social and environmental and health cost you can possibly imagine. And so the degree of transformation that needs to take place of the system is of the same magnitude, if not greater than that of the energy system. But so far, David, we have not seen anything that looks remotely like the changes that are happening in the, if you will, the way in which you would understand the food system from an economics point of view. We haven't seen the shift in subsidies or even the real debate getting underway, just starting. We haven't seen anything happen to the valuation companies, not a damn thing, right? We haven't seen anything of scale play out in terms of blended finance into the sector. We haven't seen any fundamental transparency on the banking system. And clearly amongst consumers and companies, the pace of real shift, and companies, I'm going to pick on them for one moment, moving to multi-year viable agreements with their suppliers, particularly smaller suppliers, in such a way that Tanya can then come in and provide the finance at the working capital level. It's not happening. So we've got to, I think, both embrace the scale of what we're talking about. We've got to do it at a system level, and we've got to then start building up some of the proof points of how to get it to work in practice.
Thanks very much indeed. So everybody, this is our challenge. In energy, there have been shifts. It's a staggering but incomplete shift. In food, there has been really no shift at all. And yet the shift, the change of the behavior of food systems is urgently needed, and the scale on which it's needed is huge. And so our job now in the next hour is to really hone in on the kind of changes that are necessary.